All right, time now to focus on what's powering the markets. Let's welcome in Chris Vermeulen, founder and chief investment officer of Technical Traders. All right, we're seeing some pressure today, kind of in general after that consumer sentiment. But what continues to be a winner, Chris? Nvidia, once again. Can it do no wrong?
Pretty much. As Nvidia goes, so does the rest of the market, so they say. But there's a lot of interesting things going on. Like when we look at the overall tech weighting in the SP 500 alone, we are right back to 1999, 2000 tech bubble levels. Technology is like 32% of the SP 500 index. And this market has very much so a feel of a tech bubble of we're in this frothy phase. And when we look at Nvidia, it just wants to keep going higher. We're infancy stage here really in the AI world. Nvidia is the leader, and they just did one of the most powerful things you can do for a strong company, and that is do a stock split. A lot of people go and they see $1,300 share. They're like, I can't afford that. I don't want to buy one share. They do a 10-to-1 stock split like they've done. Now it opens up so all kinds of investors can now go buy 1 or 5 shares and feel like they have some impact. So this naturally drives price higher. That's helping us. And we're also seeing Apple. They're getting into the AI space. It's created a feeding frenzy in share price. So we're seeing two of the biggest companies really just muscling their way higher, doing things that investors want to see. And it is really blinding to most investors. They don't realize the markets are actually not that strong. They are tech driven. As we see today, Russell 2000 down like 1.5% or so. In the grand scheme of things, not a lot of stocks are actually muscling their way higher. Most of them are actually struggling when we look compared to the highs from a year and a half ago. So people just don't realize we're really it's a very thin market. It's only getting driven up by tech. And we got to be very cautious of what's going on here.
Chris, is that a bad thing? Because, I mean, isn't the future of the world really tech?
It is. I mean, I would say, in base, if you compare technology from back in 2000, it's a very different picture. Technology back then was a bunch of companies that made no money. They didn't know what the internet really was. Now technology, they make the most money. They seem to. They're very powerful. We are in a tech-driven market. So it's just interesting that everybody is piling in. We're just so heavy weighted on technology right now. It's not a bad thing. I mean, it's driving the markets higher. That's what we all want. But there will be a time when there will be a cooling down phase in these markets that are getting pretty frothy. It'll pull the markets down with it. But I mean, it's driving the markets up. That's what investors want. And we might as well ride this trend while it's going, because who knows? It could keep going for a long time. There's no point really trying to pick or time a top.
It's fair, though, that the rug can get pulled out at some point, and we don't know when that will be. And it was interesting to see the action in Apple this week, especially when you think about back to April and, all the challenges it faced. It's one of those companies you clearly can't count out. So let's talk about a little bit about then just how much runway do you think, for instance, the tech sector has, especially when you say look at QQQ? What does that tell you?
Yeah, I mean, I think technology today, when I look at all the main sectors, technology right now is the only one positive. Everything else is down, which is obviously a very clear sign that money wants to keep moving into the technology space. Now, seasonality-wise, we typically see the stock market top out June or July for the summer, and then it wants to sell off. The chart pattern on the QQQ shows about 4 to 5% upside potential over the next 2 to 6 weeks. So I think there's a little bit more upside left in the overall equities markets. There's a lot of bigger things when we look at economics and what's happening with various commodities and sectors when we look at the big cycle analysis of the markets. And that is is really interesting and a big warning flag to say, hey, I think we are coming into potentially a very major top this year in equities. And all the signs are there when we look at which assets are leading the way right now and outperforming and coming to life.
All right. And then, so let's talk about, kind of potential headwinds. I mean, the market has been generally bullish this week, still on track to post gains, even with the pressure that we're seeing for, say, the S&P 500, for the NASDAQ. If the rug were to be pulled, and let's say we were, kind of near the end of a bull market, what performs better?
Typically near the end of a stock market cycle, a major bull market that where we've been in, we tend to see gold come to life. We see energy stocks come to life, and we usually see industrial stocks. And what's really interesting, if you were to take those three assets, put them together and chart them as one kind of basket of assets, and then compare it to the equal weighted SP 500 and the Russell 2000, which kind of negates the whole tech bubble, we actually have a very similar, almost an identical setup as the 2008, just before we went into the financial crisis. So it's very interesting that these three commodities, or these three assets, are coming to life and outperforming and holding up very well compared to the broad stock market if you scratch out the tech heavy side of things and small cap stocks. The Russell 2000 looks terrible. It has a very big topping pattern. Equal weighted stocks are struggling. So this is a very big thing. I mean, we're seeing this in the Russell 2000 that people are dumping shares. They're worried about falling market pricing. We actually have panic selling right today in the stock market. I have a custom ratio that we follow based on the New York Stock Exchange volume flows. Today is panic selling, even though the market's the NASDAQ is positive. We actually have people dumping shares. They're dumping average stocks, non-tech, and small caps. Yet the market is still holding up near all-time highs. And we've seen panic selling a couple days, 2 out of the last 3 days, that people don't realize going on. So we're climbing this wall of worry, and the market loves to do that. But there's a lot of signs behind the scenes. If you were to peel back the layers to this onion here, you'd realize there's distribution selling going on, and it's completely masked by the technology driving things right now. So, I mean, got to stick with the trend. It is up, but the big picture is telling us we are potentially 2-3 months away from a major market top in equities, just based on the cycles in which commodities and assets have come to life and are starting to outperform.
All right, well, pay attention to the cycles, and you're making an excellent point. Russell 2000 certainly not participating, not just today. Chris Vermeulen, founder and chief investment officer of the Technical Traders. Thank you, Chris. Have a great weekend.
Thanks, Diane.